Okay, Professor. So last week we started the final account of a sole trader on financial accounting. Please, kindly, one of you should just in a summary tell us about the few things that we discussed so we can move on. Whoever is ready can do that for me. Who's going to do the summaries for us? Please edit with your full name, all those who have joined. Edit with your username to your full name so I can take attendance. Very important. Okay, Austin, let's hear you. Well, it's an error, but still, let's hear you. Since you're in class last week, you can do the summaries for us. Oh, professors, let's be fast about that because of time.
Sir, please, good morning.
Good morning, Austin.
Sir, please, last week we're learning the financial accounts of a sole proprietor, and we looked at two parties in this, and we talked about the sole proprietors and the sole traders, and we said they are generally all of them are classified as sole proprietors, but a sole trader is a sole proprietor, but a sole proprietor is not a sole trader, and we said sole traders specifically make profits by buying and selling, while sole proprietors render services. And then we came to look at the final account of the sole proprietors. And we said after an accounting period, typically a financial year, they draw financial statements to make a complete overview of their performance throughout the year. And we said these accounts are the trading accounts, the profit and loss account, and then the balance sheet, which is also the statement of financial position. And we said the trading account is prepared to determine the gross profit or loss, whilst the profit and loss account, which is also known as together with the trading account as the income statement, is prepared to determine the overall um, profit and loss of the sole proprietor. That's what I can recall.
Okay, thank you very, very much. That was a detailed explanation, but I think, well, let me hear from others before I make comment. Who else? Or if you have any comment on what Austin has provided, you can go ahead. Okay, so I think few corrections. Prof. Austin, all you said were accurate except for the distinction between the sole proprietor and the sole trader. So my statement was all sole traders are sole proprietors, but not all sole proprietors are sole traders, right? And I gave the indication that the sole proprietors, a sole proprietor is just an individual who is doing business. Now, this business could be trading or rendering service, right? So a sole proprietor could be doing trading or could be rendering service. We've seen the trading to be buying and selling tangible goods or merchandise, right? Now, those sole proprietors who sell the tangible goods or merchandise, they are those we refer to as sole traders. Okay. So please note that correction for me. But I think all the other points you made are very accurate. Thank you very much. So today we are continuing since we've now seen the three final account of financial statements, trading, profit and loss, and balance sheet. Of course, you can refer to the trading and profit and loss account as the income statement and the balance sheet as statement of financial position. I think we're looking at the trading account and we saw that this account is prepared to determine gross profit or gross loss. And what that simply means is that I want to know the profit or loss the person is making from his trading activities only, right? And so I gave you a hint that back in the days when you were asked to calculate profit, you only deducted your cost price from your selling price. It's the same idea here, but selling price will be represented by net sales revenue, while cost price would be cost of sales. So today our main focus will be on knowing these terms and how to calculate them. And of course, present it in a format. And I employ all professors to pay attention because this format will be with you from now, tomorrow, and forever. Okay, so before we move on, if there are any questions, any thoughts for me, then if not, we go ahead. So it's established that the trading account is prepared to determine gross profit. Please, in exams, if you don't add the gross, you'll be marked down. So gross profit or gross loss, always do that. How do you get this gross profit or gross loss? You compare your net sales revenue to your cost of sales. So professors, let's look at what net sales revenue is. Your net sales revenue simply is your total sales minus return inwards or less any return inwards. I think we are all familiar with the term return inwards. Goods that are returned by customers. So the goods you sell out, which are returned back to you, you have to less that from your total sales to get your net sales revenue. So a simple scenario is where I sell, for example, 100 Toyota Corolla vehicles. Okay, and then my customers return, say, 5 of them because there are issues. Then if I want to get my total sales, it will be the 100 I sold minus the 5 that has been returned. So I hope the net sales is straightforward, right? The second one, which is cost of sales, right? You have to look at a few things before you arrive at your cost of sales. So what is cost of sales anyway? Professors, cost of sales refers to all the costs incurred to make the goods or merchandise ready for sale. All the costs you incur to get the goods or merchandise ready for sale. So if I'm a car dealer, my cost of sales on selling or buying and selling cars would be all the cost, all the costs I will incur to make the cars ready to sell. Right? So before we dig in, I think the general viewpoint will be that if you want to know the cost of cars you have sold, you would first have to consider the cost of buying the car itself, plus other incidental, or should I say, consequent expenses before you can make the car ready for sale. And some of them include, you have to go to DVLA to register it, right? So you incur registration costs. You would have to do the road where you have to pay for the roadworthy to get that certificate, right? You incur other costs, all to make the car ready for sale. And without these costs, you can buy the car, but you cannot use it because the police will always be on your head. You have to also do your insurance, right? So that is a bit about cost of sales. If you are selling tomatoes, then of course your cost will include how much cost goes into the price of the tomatoes. Things like maybe somebody assisted you to carry it to your shop, so the person took something, right? All those costs are apart. So if you check the screen here, cost of sales actually is the cost of the goods you have sold plus any incidental expense, or what we normally refer to as trading expense. Any expense you incurred in the course of the buying and selling, right? And I think with the examples I gave, you can appreciate some of the expenses you would have to incur to be able to sell your product or goods. So on the first base, cost of sales is your cost of goods sold plus your trading expense. What is cost of goods sold? Right? So if we dig into that one, cost of goods sold is the cost of goods available for sale less your closing stock. What is the cost of goods available for sale? It's your opening stock plus your net purchases. And what is your net purchases? Your purchases less return outwards, add carriage inwards. Now, let me make my professors appreciate these things that I'm reading to them so they don't get confused. Okay, and so we'll come back to this slide, but I want us to do a few, discourse here. So if you check what I just read, you can pick out some few elements which are very familiar with you. If you are looking to calculate your cost of sales, the first thing you consider is your stock, right? The stock of goods you are selling. Now, it is very important for you to know, if any, the stock at the beginning of the period and the stock at the end of the period. So if I'm a tomato seller and I'm going to sell in the market, I should be able to determine if I had some of the tomatoes already there, probably in the previous year or in the previous day. Okay, so at the beginning of the day or the accounting period, you should check if you had some of the stock available. So the stock at the beginning of the year, that is what we refer to as the opening stock. Okay, stock at the beginning of the period. The same way, you also have to consider your stock at the end of the period, and that will be your closing stock. So the closing stock is the stock at the end of the accounting period. So your stock is very important if you want to know, because of course the stock is the goods. So if you want to know the cost of goods you have sold, then stock is very important in calculating your cost of sales, right? But then you need to know that you have opening stock as well as closing stock. Now, you could also see that I made mention of certain things like, let me go back to that page again. You see things like return outwards, right? And carriage inwards. Return outwards and carriage inwards. I'm picking these items because they are very familiar to you, right? So let's put that down. Apart from your stock, you should also be interested in your return outwards and carriage inwards. Now, I want professors to tell me, please, what is return outwards and what is carriage inwards? Because you know these things. What is return outwards? Yes, Prof. Portia.
So please, return outwards is when a business finds fault with some of the goods bought by the business and return it back to the person.
Okay.
The supplier they bought the goods. Yes. Us carriage inwards would be like they maybe yes the place they bought the goods from, the person they paid to bring the goods into the business, carriage in was like they carry you. I don't know, say please.
No, I
Yeah.
think you've stated it. Just the word, the right word is what is. Thank you very much, Portia. I appreciate that. So yes, any other thoughts? Any other thoughts? Any other thoughts? Return outwards, carriage inwards. So like she rightly put it, return outwards refers to the amount of goods returned to a business or returned to suppliers by a business, right? So it's the amount of goods a business returned to its suppliers. So here we are looking at the sole trader himself or herself going to his suppliers to return goods he earlier or she earlier bought from them. That's return outwards. And then of course, carriage inwards simply refers to its transportation cost, the cost of transporting the goods to your office premise. Okay, so carriage inwards is the cost you incur to transport goods from your supplier to your shop as a sole trader. So I hope that is clear. Now, you also saw something like purchases in there, right? Yeah, just that it's net purchases. So purchases is also important. Besides your stocks, it's also important you look at your purchases. And of course, purchases simply refers to the amount of goods that have been bought with the intention to resell, right? Okay. Now, these key things I've written here would help us to calculate our cost of sales. The last thing I need to add on will be the trading expense. Trading expense. And professors, trading expense is any expense you incur directly with your buying and selling. The most common one is wages. The most common one is wages. And please note this, wages. Salaries is not bad. Why wages? Because we know wages is paid based on the work the person has done, right? I think Portia has a hand up. Is that a question for me, Portia?
No, space. I want you to repeat what you said about the trading expenses.
Okay, so the trading expense is the cost you incur directly, right? In the course of doing your trading business, right? Okay. Or better, so let me say all the costs you incur to get the goods ready for sale. Okay. And I've just hinted that the common example you see is wages. Wages. Some examiners may, confuse you and do something like this: wages and salaries. Salaries would not be considered as a trading expense simply because it is not directly, right? Even though it's in there, but you cannot directly trace it to the trading activity alone, right? Because you see, you pay salaries, right? Regardless of whether the person does the work or not. Okay, but wages are based on the work the person do. So for example, even teachers, if you check teachers, we are paid salary, right? But it's not every time that we are teaching. If we were doing the wage payment basis, then the teacher will only be paid when he or she has gone to class to teach, right? So wages are more direct to the work than salaries. So if you discuss costs, some of the indirect costs incurred by businesses will include salaries, while the direct costs will include what? Wages. Okay. So when you see wages and salaries combined together like that, please, it doesn't make it a trading expense, right? It is only when wages is singly, I don't know if that's the right word to use, or if it's singled out, right? Then it's a trading expense. So professors, with these items, we can calculate our cost of sales. Opening stock, closing stock, purchases, return outwards, carriage inwards, and then trading expense or wages. Now, let's look at how you calculate it. Okay, let's look at how you calculate it. So I'm doing that here. If you want to find your cost of sales, let me go to another slide. If you want to calculate your cost of sales, please follow how I'm going to get this cost of sales so that you understand it once and for all. If you have questions, please feel free to ask. The first thing you think about is your opening stock. That's the first thing you think about. The goods that were available at the beginning of the period. You always have to do that. Then you add, so this opening stock, you add your net purchases, right? Your net purchases. What is that net purchases? It simply refers to your total purchases plus your carriage outwards minus return inwards, or better, so you can less the return outwards. So minus return outwards. Plus carriage inwards. That is your net purchases. So you can substitute that in the formula and get your opening stock plus purchases minus return outwards plus carriage outwards. Now, how does it make sense? If you are a seller and you have a shop, let's say in the Kantamanto market, if you are starting a new year, you have to check the goods that were there at the beginning of that year for those selling clothing or whatever. So you check that. Then you also, because during the year, you're also going to buy more of the clothing to add on because the stock may not be enough to satisfy your customers. So within the period, you'll be buying, and that's the purchases. Now, as you buy those clothing from your suppliers, you will carry them to your shop. Oh, sorry, that should be carriage inwards and not outwards. Okay, add carriage inwards. You'll be carrying the goods to your shop, and that's the carriage inwards cost. You have to add it. So if you went to, say, buy 100,000 worth of clothing from your suppliers, and the clothing were brought to your shop by an aboboya who charge you 1,000 Ghana cedis, that carriage inwards cost is added to your purchases. If it so happens that the clothing came and some of them were oversized or you were oversupplied, you will return it out to the suppliers. And so you have to less that out of the cost build-up you are doing. Okay. Now, after you have done this, you less your closing stock. Your closing stock. Why are we lessing closing stock? Because we want to know the total amount of goods we have actually sold. So let me do some pencil illustration here. So let's say that at the beginning of the year, I had 2 shoes. This is my opening stock. I had 2 shoes at the beginning. What I'm saying is that I have to add whatever I bought. So maybe during the year, I went to buy further 5 shoes. Okay, now these 5 shoes, I returned one of them out to the supplier because it wasn't the color that I chose. So I would have to subtract that. Okay. Now it only makes sense to say that if I do this, what I'm getting will be the cost of shoes that I actually have to sell, which is going to be 1, 2, 3, 4, 5, 6 minus the 1. So I'll get what? 5. Okay, so after bringing my opening stock, if I add what I bought during the year and I subtract what I return outside back to the supplier, then the remaining will be the goods that I have available to sell to my customers. And I hope my professors are not confused about this. Now, at the end of the year, if I want to know the total shoes I have sold, let's assume that at the end of the year, I still had one shoe in the shop. If I ask you to determine the number of shoes I have sold, what would be your answer? Let's look at this one. What would be your answer? I already had 2 at the beginning of the year. I went to buy 4, but I returned 1 back to the supplier. So after doing those analysis, I have 1, 2, 3, 4, 5 shoes. At the end of the year, I have 1 shoe remaining. How many shoes have I sold? I think this should be easier for my professors. Yes, let me call Bright, Prof. Bright. Prof. Bright, can we hear you? I said, welcome. Oh, Prof. Bright, is it that you are confused or you don't want to attempt and get it wrong? Please don't forget about wrong answers or responses. You see, talk, whether wrong or whatever. We are learning. This is a learning platform, right? Okay, maybe Bright is, but you can type in the chat in case your environment is. Let me see. Josephine had her hand up, but let me see who would I call. Prof. Kujo.
Good morning, sir.
Yes, morning, Kujo.
Hey, please, can you repeat the question?
Okay, so you followed the analysis I did, right? With looking at what you had at the beginning of the period as your opening stock, and then what you bought during the period, right? Which we analyzed and saw that then whatever you get here is the shoes that were available to sell. Now, at the end of the year, you still had 1 shoe in your shop. So if I ask you, how many shoes have you sold during the year? What would be the answer?
See, like you sold all.
Okay, so to you, you feel you've sold all the 5, right?
Yes, please.
Okay. That is Prof. Kujo's thought. Let me get Josephine's thought. Josephine.
That is 4.
Okay, Josephine says 4. So we have 4 and 5. Let me see the votes. Let my professors. Prof. Bridget. Somebody is giving thumbs up. Portia gives a thumbs up. Is it to the 4 or the 5?
4, sir.
Okay. Great. So yes, the answer is 4. I think Emmanuel didn't see the 1 shoe hiding in his shop, right? So Emmanuel, the issue is that let me come back to you. In fact, let me make this very practical. Let's say you have 2 school bags. Okay. 2 school bags. At the beginning of, say, the year 2025. Now, during the year 2025, between January to December, your father bought you extra 1, 2, 3, 4 extra bags. So ideally, if you add the 4 to the 2 you had at the beginning, that would be how many? 6 bags. Then you said, oh, Daddy, this bag, I don't like the color. Return it back to the supplier. So that is the return autos, right? Your father returns it back to the supplier. After that return, you can tell that, okay, I already had 2 bags. Daddy bought me 4, making 6, but he has returned 1. So now it's what? 5 bags remaining for me to use or to take to school. Now, in case of the trader, that will be the goods that is available for him to sell. Now, if at the end of your year 2025, the 5 bags that you had is only left with 1, then the question is, how many bags have you used? Okay, within the year. or you have completely wasted. Let me put it that way. Then, of course, it will be what? 4, because you subtract the remaining back from what you had available. Okay, maybe in the back context, I should say that you were only left with 1 bag at the end of the year 2025. Your daddy is going to ask you, where are the remaining bags? You say, okay, I have used them and they have spots, right? So in the case of the trader, he would have sold the 4 and it is left with what? 1. So now the 4 that the trader has sold will be the cost of goods he or she have sold. How did we get that? We subtracted the closing stock, the remaining stock, from what she had available. That's the point I want to put across. Okay, if you are still confused, please feel free to share so that we clear that confusion. Yes, Augustine.
Sir, please, I still don't get it.
So which part don't you get?
Sir, please, the closing stock part.
Okay, so let's say you sell exercise books in St. Augustine's, right? You come to school January and you already have 10 notebooks with you. So those are the books you are beginning with the year. Now, your students' customer base are plenty. So you said, oh, these 10 books I already have will not be enough. So you go to Kotokraba Market to buy additional 20. So at that point, Augustine, how many notebooks do you have?
So please, 30.
Good, 30. Now, out of the 20 you went to buy, 5 of them were bad. You requested for notebooks, but they gave you drawing book. So you return that 5 back to the supplier. That's a return outwards. So are you not going to less it from the 30? You will do, right?
Yes, sir.
So when you less that 5, you have returned out. How many books would you have available for you to sell?
So please, 25.
Thank you, 25. Now, if the semester ends or the year ends, and you still have, out of the 25 available you have, you still have 2 of the books remaining with you. Then the question is, where are the other ones? Which is how many? 23, right? Good. That 23, where is it? Obviously, it will be the books you have sold out to the students. Is that not the case?
Yes, sir.
Yes, sir. Okay, so I feel with this example, at least it should be okay.
Yes, sir. Thank you, sir.
Yeah, the point I'm trying to make is that if you want to calculate your cost of sales, begin with the opening stock. Add the net purchases, as in, so the 10 notebooks you had at the beginning, that is the opening stock. Add what you bought from Kotokraba Market during the period, that's the purchases. And then less return outwards. That will give you the goods available. Less the goods that you didn't sell, that's the closing stock. So closing stock is sometimes referred to as unsold stock. If you do that deduction, then you can tell the quantity of goods or amount of goods you have actually sold. If you understand this, then we can put it in the format and see how best it works. But I think we'll do that in the second session. Few things in the chat. Let me read. Sir, please. He said that he's having network. Oh, Bright. Sorry about that, but I hope you can hear me clearly when I talk. Okay. So, professors, any question? If there are no questions, the next thing we have to do is to arrange these things we have discussed, the net sales and the cost of sales, in a format, because that format is what you have to present when you are given a question to prepare the trading account or determine your gross profit or gross loss. So let's meet in the second session and do that. So see you soon. The second session details is there. Please click on it and join after this one. see you in the next 2 minutes. Take some water and stretches. It's very important.